everybody else has to bear the risk for SVB and Silvergate and SD. There's two or three little concentrated banks that have a unique problem. It's not a problem of the rest of the banking system. Yet the rest of us depositors are going to get hit. So flat out lie by Biden. The banks aren't paying this for this bailout. The depositors are paying it. They're going to be hit with. They're already hit with $9 billion a year. They're going to have to triple that to pay the 25 billion back. So this is insane. The
What's your proposal, Robert?
the
By the way,
uninsured.
Robert is the reason why Biden had to make the distinction, and
No.
he just
No,
answered.
no. The market made that distinction. Of course,
Okay.
the investors
I'm just
were
making
white.
the point. There is the constituency that I use represent colloquially, but I'm saying there is a constituency that will be very sensitive to doing anything. So drawing the distinction is probably the best case scenario.
We should be doing safety and soundness.
Robert. The people were worried that the government will use taxpayer money to bail out the investors. He just cleared that. That's all.
No.
Nothing
Nobody's
else.
talking about that. We're not talking about the investors. Everybody agreed they were going to get wiped out on these banks. What we're talking about is the uninsured, and Stock Talk nailed it. Why are we hitting 25-30 billion out of the FDIC just to bail out one or two of these unique, super concentrated, mismanaged banks that the rest of the banking system doesn't have this problem? We should have let them fail. Let them fail.
Because if the deposit holders weren't made whole, you're talking about tens of thousands of jobs and
no, it's not that many. No, it's not that many. How many?
Well, to the tens of thousands of people, it feels like a lot.
Yeah, no, it hurts for them. Absolutely. Just even the employees of Signature Bank. There's 8,500 employees. Most of them have a job here.
Everybody on Etsy, their payroll was running through that bank. I mean, so
yeah, but again, this is not oil patch like the 80s. This is nothing major. This is a very minor issue. Everybody's saying it's contagion. The bailout cries made it a contagion, and Joe Biden standing there on the microphone doesn't engender any confidence in the market when he talks and lies to us that this is going to be safe. No, what their moves are making the rest of the system unsafe by draining the FDIC fund and socking the rest of the depositors. This should have been left to leave it like it is, insure the insured depositors, and don't insure the uninsured depositors.
Wow.
Douglas, what do you think?
Yeah, I can't say I agree with that. And I don't know. I kind of think that to speak with such certainty about what would or would not have happened, I mean, any of us can play that game. You can take both sides here that, I'm not saying there would have been widespread contagion, nor am I saying that it would have been contained to just, two or three banks. Clearly, we're going to see today just how many regional and smaller banks would be wrapped up into this. There's always second and third order effects. To think that it would just have stuck with that first order effect of just these banks, I can't do that. I also don't like, finger pointing at any one particular administration. I mean, how many administrations do we want to go back that have set up this situation in the first place? That's like, let's stop doing that. It's kind of divisive, if you ask me.
Definitely. And the regulator and the FD and the Fed does it. The Fed and the regulators are not micromanaged by any administration. They say they're independent. They have been working on Basel III for years or almost decades. The bank capital standards, by the way, which are a problem, they have zero capital assigned for treasuries and munis. Now, guess why the banks are loading up on treasury and munis? Because they don't have to put any capital. And now they're about to get hit.
Robert, we now live in a world since 2008 that if there's a problem, there's going to be money printed to throw at it to create stability. I mean, that is the reality, and it doesn't matter the administration or what president is sitting up at a podium. The guy said, look, you got shareholders and bondholders that are screwed, and you got depositors that are going to be protected because they weren't privy to this. This is the world we live in now. And again, I would just kind of focus on the facts there, not make it agnostic as far as, which administration is responsible for
But what we're doing is rewarding poor bank behavior and
Yeah, but I agree with you. See, I agree with you on that. Like, I was on here last night and the day before, consistently pointing out that some stupid decisions were made at the managerial level of a bank. Not to manage your risk. It was unhedged. Who does this? You got selling stock into it, a risk officer absent since April. Yes, all of that should be looked into. But like, we have to live in a world where two things can be true: the fucked up nature of those decisions and who's to blame and bad management, versus people that should not become victims because of that. Yeah, there are just quirky things about this. What, 97% of the depositors at this one bank that specializes in some of the riskiest investments as far as venture capital is concerned. Yeah, it's very quirky, and that outlier is now setting precedent for all other institutions that maybe aren't privy to that kind of risk. On the other hand, you have how many, and we're going to find out, institutions that are privy to that kind of risk. Everyone here is trying to navigate gray area, and I just have, this bad taste in my mouth when we go too far to the left or too far to the right. And I don't mean that necessarily in a political stance. I just mean to the outer ends of the spectrum, to say, oh, this is the way it has to be, or that's the way it's gonna be. It's just all of us in here navigating that gray area. And guess what? There's no winners in my mind. I mean, maybe I was thinking about this after I dropped my kids off. Who's the win? Who's winning here? And I can't even say the depositors are. They're being made whole. Maybe the banks that are too big to fail are the winners here, because the flows out of these smaller regional banks, the trust that's now eroded. Hey, why would I have my money at a small regional bank where, we just watch this all go down? How do they even preserve their relationships? I'm going to Bank of America, JP Morgan, so on and so forth, where I don't need to worry about that. Maybe they're the only winners out of this. Maybe they take a temporary hit to their stock price, but geez, really no one wins. It's sad all the way around and a bad look for America. But I think we all have to agree on that point. And if we all can agree that we're navigating some pretty shitty gray area here, we might actually have a chance of coming together on an issue in a pretty bad situation.
There's another side benefit, which is the ability for the US government to sell more treasuries.
The only thing I will say about the nonpartisan, we don't have to describe at what year this regulatory change happened, but let's just talk. There was a specific regulatory change that was lobbied by SVB that enabled them not to have to mark to market those those government-backed securities, right? So
2015,
right. So,
yeah.
well, I'm trying to be nonpartisan for the sake of bringing the whole spaces together, but nonetheless,
Yeah, no, it's fun.
that is
But
something that is going to be revisited, because you can draw causation right back to that.
Totally. The bigger impact is, like, are we fundamentally altering the risk return nature, where we have private gains and social losses? That's really the problem. And then it's the same as 2008. And that was a real issue. 08, 09, big issue. This is more of a localized issue in these banks, and it now has become a big deal. I know things are different, speed of information way different, but unique risks in SVB and Signature.
Also, by the way, just a
little market update headed into the open here, as we are about like 2 minutes away from U.S. market open here. FRC, First Republic Bank stock, is down 66%. PacWest Bank Corp is down 40%. Schwab is down 12.5% headed into the open, and it was down over 20% last week. Credit Suisse is down almost 10% headed into the open. Bank of America is down almost 5%. Wells Fargo is down almost 4%. Even Citigroup is down. JP Morgan is even down, even though they were perceived beneficiaries. So almost every single.
Yeah, why are the big guys down, Stock Talk?
I think it's just general.
I think this has brought attention to their treasury and MBS portfolios. If we're going to have a 10% haircut or whatever at SVB, then what's in the FDIC coming out with a $620 billion unrealized loss? That's now in focus, I think.
Right, and so to put what you just said simply for the audience to understand what he's saying, it's really the idea that when you put your money at a bank, you're not really getting return on it. And so this event has kind of potentially woken up depositors to the notion that a bank is taking inherent risk with your money. And so why aren't you being compensated for that risk? And so, look, is this a watershed moment for the change of banking? I don't know. That would require a crystal ball for me to predict that. But is this a significant moment that has exposed conceptual issues in the way banking is conducted? Yeah. If you would have asked somebody 15 years ago, 10 years ago, hey, if everyone shows up to the bank tomorrow, if every American shows up and asks to withdraw their money, would banks be able to give it out? No, of course not. And people have known that just through common sense because of fractional reserve banking for a very long time. But now the question becomes, all of these people can ask for their money in a much more effective and accelerated way than they used to be able to. And so, yeah, banking sentiment is really bad right now. I've seen a lot of pre-market trading sessions. This is one of the biggest declines I've seen in a pre-market trading session with this much volume. And here we are headed into the open too. So we'll see what happens.
It should be no surprise to anyone, regardless of what bank you're talking about, that one, it's going to be messy. That two, there's now a decline in confidence across the board until we get in 2 days where there are calmer waters. We're not even, you can count on one hand the number of days this has happened. And one of the mistakes I think people make, given the fact that information does travel so fast, is that remedies also get applied that quickly. And even though, 2 days ago I said, man, everyone has this pit feeling in their chest and in the back of their mind that the government, in all instances, will likely fuck this up. To my surprise and I guess delight, they came through and did what I thought needed to be done here on Sunday night. So
Douglas,
for those who
Douglas,
said, oh,
can I ask you a question? Sorry, I've just jumped in. So, obviously, everyone would have expected the market to drop today, but did the market drop more than expected, or exactly what everybody was expecting? I guess that's the first question.
I mean, it's what are we open yet? What is it? No, it's just opened. All right, we're
Yeah.
opening we're opening 240 down. Geez, that's like fucking every other Monday this year and last year. It's hard for me to be, if you showed me down 900,000 on the Dow, I'd be like, fuck, this is a bad week here. But we'll see. I mean, to talk to me about this at 9:31 with the futures just coming into real trading here, impossible to say. But if you put a gun to my head, I'd tell you, all right, that ain't bad here. But as far as like people's expectations, that, trying to get back to my original thought, that solutions would be applied. Yeah, it's like people who thought Elon Musk buying Twitter would instantly fix it within like, a 7-week period of time. Dude, you got to let that happen for a year. I hope it doesn't take a year in this instance. I hope that was a decent analogy. But can we give this, a handful of weeks to see, whether things calm down and whether things get contained? I mean, what I'd be doing is simply sitting in the pocket, watching flows of depositors and seeing if they're leaving in mass, regional banks into big banks. I would check the stock prices, which is where most of our focus is on this morning, of banks as an indicator of how much risk investors believe any particular bank has. But to see Bank of America and the really big banks, down 5 to 10%, that's, lack of confidence in the system as a whole. You switch over to, First Republic Bank down 66 to 70%. Yeah, that's, obviously requiring a little bit more of a focus and understanding as to why. But we know why there. They seem to be the next biggest domino to fall. That has now been backstopped after Silicon Valley Bank and, to our surprise last night, Signature
So
Bank.
First Republic Bank stock has been
Yeah, I was just on the phone getting that information. Yeah.
There you go. So clearly investors spooked, and stock talk. I agree with you. Like that, what you were talking about when I jumped in the call here is, if you're an equity investor, why are you continuing to invest in those shares? You better be hoping for brighter days ahead, or you think there's a rebound down the line. That's a really risk on play at this moment, and I think you bringing up that point is going to be central to ultimately how we see this all pan out amongst amongst bank stocks.
Is First Republic a normal circuit breaker halt?
Charles Schwab has been halted down 20%.
Yeah, those are circuit breaker normal.
Yeah,
just normal
not
circuit
for
breaker.
news.
Robert,
Yeah,
Robert,
so,
just moving back to the Biden speech, just specifically. I got two questions. A, did you expect more? Because it just feels like he didn't add anything more compared to what we had yesterday. And the second question is, has he? Also, three questions. Has he allayed the fears of the people? And the third, or stopped any kind of possible banking contagion? And the third thing is, should he have answered questions to be able to, cover all the issues and cover all bases?
So, he got one thing right. I think it was the shareholders and management. He's talking about bringing accountability to them. The shareholders got wiped out. That's the right way to work. But the two other things, flat out strikes against him. Should the president ought to have answered questions. I don't think Joe Biden is really the right person to be doing that, though. So I think it was sort of wise for him to quickly scurry and hobble away. But the big thing is it doesn't engender confidence in the banking system. That's to be debated. Some good comments saying let's see how it plays out over the next 2 days. You could say they should have let this not even do anything. Not even send Joe Biden out to the microphones. That probably would have been a better thing. But
yeah, I would rather see Yellen out there than Biden.
Exactly.
I do think that it's important to stress to the American public that this isn't a bank bailout in the traditional sense. They're not bailing out shareholders. They're basically bailing out the depositors, which is quite a big difference, I think.
Uninsured depositors, yeah.
Right.
Yeah, I mean, most people, and I was on a lot of streams last night as well, but most people's issue is, although you're trying to make the difference, in reality, from a holistic point of view, in the end, whether it comes from the Federal Reserve or wherever it comes from, essentially the decision, based on what the decision that's been made, you're basically saying that you're going to cover, because if this happens again to other banks, you're basically saying you're going to cover them banks as well. Isn't that right, Brian?
Yeah. So yeah, I mean the downstream impact on other banks and the shareholders of those other banks are definitely positive. But I do think that it's important that you don't sell this as, hey, we're bailing out these banks that might have been irresponsible. At least not yet. I mean, if it goes further than this, and what happens does show.
Wow,
But aren't you
so
saying,
First Republic just annulled it and halted again. So go
Isn't
on,
that the
Kevin.
biggest question on
Brian,
why the
aren't you
market
saying,
is not responding to that assurance? You know what I mean? When you look at First Republic and some of the other ones.
I'm sorry, I didn't hear
Brian,
that.
aren't you saying that you're gonna basically cover all banks now? So when you said that making irresponsible decisions, if I was a bank, I'd be willing to make more irresponsible decisions because I know I'm going to be covered.
Yeah. So yeah.
Shareholders are not covered though, are they? That's just the
Shareholders get wiped
depositors.
out, right? It's what do you do that impact the uninsured depositors?
Yeah, I get his argument.
Before you answer, Brian, sorry, just before you answer, Gavin, can you tell me, so the stock was halted again, so started trading and
Yeah,
got
so
halted again.
it was live for 10 seconds.
Okay.
It got halted again.
And what does that mean? I'm not a trader, so what does that mean exactly? Is that circuit breakers again?
Both are circuit breakers. If a stock has a big price movement in a short time period, it's halted by the exchange for 5 minutes to start. Then if the volatility continues and they keep on reducing the time, so it could be 10 minutes, could be half an hour. But the other two we had last week were for news, which weren't halted by the exchanges, they were halted by the company. This is by the exchange, so
very big
the company
difference,
has nothing to do with it. Yeah.
Okay, thanks. Gavin.
And if the SEC wants, they can also halt the stock as long as they want. But this is just a normal halt.
Okay.
Based on the price action.
Okay, sorry, Brian, go ahead.
No, I was just gonna say I get his theory or what he was putting forth to me, in that if you do say, hey, I'm gonna back depositors in these other banks, then you're putting the government's money at stake and giving confidence back to the American people. So these other banks that may have been in trouble before are no longer in trouble. But I think that's the purpose of it all.
But it has real
guys,
consequences. The premiums are going to be hit. The other depositors' premiums are going to be hit. It's not the banks paying this. It's going to be depositors that are going to be hit with tripling the premiums. FDIC gets $9 billion a year in premiums, And just to take care of this thing, they would have to triple them, to cover the 25 billion of losses here. I don't know how they're going to. They were already underwater, so FDIC kind of needs a bailout anyway. So I think premiums are going north, and that everybody else is going to feel the pain for it.
And
So,
Robert,
so my
isn't that
question is
isn't yeah?
no, my question is more broad. Like this, what worries me more is the sentiment itself. Like if people start to feel like the banking system is collapsing again, we get a run. That's the thing that concerns me. And it got triggered when we were doing the spaces over the last 3 days. We had all these, from Jason Calacanis to Bill Ackman and Mark Cuban coming in, and just most of them echoing that if nothing is done, uh, you know, this week will be a bloodbath. Now, the Fed did come in, they did support the system, but the markets don't seem to, they still seem to show a lot of concern. To show the big banks, does it catch anyone by surprise that the big banks are falling as well? Because everyone agreed that these will benefit.
No, no, it shouldn't, and that's the confidence narrative. That's the it's not a surprise because you have the entire sector kind of under pressure right now. And there's a big discrepancy between the major banks and their volatility this morning and regional banks that may or may not be specifically under pressure due to similar situations of a Signature or a First Republic and, of course, Silicon Valley Bank. Is anyone, and we talk about, bank runs, is anyone really here concerned about their deposits at a Bank of America or a top or a JP Morgan? I can feel confident speaking for everyone that the answer is no, because number one, we know they're too big to fail. So this notion of a bank run and a collapse of the banking system, I think that's silliness. I truly do. I think the focus here is on how many smaller and regional banks have made stupid managerial decisions along the lines of Silicon Valley Bank and have mark to hold portfolios that have been obliterated and now need to use this facility to we shouldn't even use the word bailout, to get out of the trouble that they're in. And guess what? I guess when you raise your hand to say, yeah, we done fucked up and we need to use that facility, yeah, equity holders and bond holders are like, damn, and they're going to be punished for that. Much to Stock Talk's point about why would you hold on to those shares? That's the mess. That's where the focus should be. I guess I would have a low tolerance to extend that into not being able to get deposit or trouble at the biggest banks. If that's the case, guys, holy shit! But that's not the case.
I think the fact that JP Morgan is down and the whole sector is down is probably good because it shows a panic response. So in other words, if you look at First Republic and the other regionals being slammed, so it's the entire sector, because that is to me. Somebody made the point before, which I think is really smart. Stock trader, I think, about people will interpret the stock price as a proxy for the safety of the bank, right? So if you look at, you want the medicine to work, that does need to stabilize, but JP Morgan being down makes no sense. They are the prime beneficiary of a lot of those outflows. So I think exactly what
Yeah, but I mean, I know markets will take care of things pretty quickly here, but I have my doubts on that. You just said medicine kicking in here. Even if you take some cough syrup, you got to give it some time to get into your
it
blood
takes time.
here
Just
and do
because
some
we've been
stuff.
on a space for days doesn't mean everybody else
Yeah,
is.
exactly, Matt. That's the point here. One of the effects of us all talking here and bringing our energies into it, and I love it. So many different points of view, and we're keeping it cool. I love that our expectation is like, oh well, we just talked about it and addressed it. Well, this should be reflected right now. Get out of here. That's not how that's going to happen.
But let's look at
Douglas, you don't. Go ahead,
Mario, good point in the sentiment. These are confidence games, but I guess the real it is bringing back the focus to the Treasury MBS portfolios of the banks. So what are the marks? I mean, everybody's seen rates come up so high so fast. It was only a year ago that 10-year Treasuries are under 100, and now. But anyway, we had a little good move this morning on the 2-year coming in 50 bips or so. That actually should help the mark-to-market issue. But I guess people, what are the mark-to-market losses in the fixed income portfolios of the banks? That's the big issue.
I want to go to Jeff. I know, Sulaiman, you have a few questions for Jeff as well. Just for anyone in the crypto space, Ran is doing a video covering the developments there. I was looking at crypto, seems to be doing well today and over the weekend. And I think CZ, the founder of Binance, announced that he's investing $1 billion into various cryptocurrencies. So that's, helping the market. But I want to go to Jeff. Jeff, your thoughts on the Biden speech and the sentiment?
I'm just here to do a victory lap on my reporting yesterday, which accurately predicted that this is coming.
Congratulations.
So now that I've said that, I can duck off the call. No, I mean, I thought it was interesting. I mean, I don't want to read too much into this, but his body language he looks so deeply uncomfortable, and I think there's already an ambient sense in the administration that this might politically not play super well. You can just sort of tell when Biden is in a good mood or feeling himself, and I felt like his, I don't know if other people shared this impression, and I apologize for the theater criticism that's so non-substantive, but it just struck me that this is something that he looked like he had been dragged into, and the administration keeps saying this is not a bailout, and they keep which may be legitimate for a lot of reasons, but this is certainly not a fun thing for the administration, and I think they're going to be doing everything they can to try to make it clear that they're not, in the pocket of Silicon Valley donors or these kinds of banks, and will be trying to be very forceful about regulation in the weeks to come. I'm sure, I'm already hearing a little bit about like what can they do now to make clear that that's not where they are.
Jeff, do you think that he didn't answer questions because he was, as you said, uncomfortable with the situation, was afraid that he'll, slip up, or do you think it was that he actually didn't know what to say in this scenario?
I think it could be a bit of both. I mean, to state the obvious, it's just really not the situation you want to sort of freelance and kind of improvise. He certainly does that quite a bit, and I think, I have no reporting to suggest this, but it would not at all surprise me if he was told by, his top economic advisors, don't answer questions. The only place that can lead us is in a bad direction. Last night we had a call with a senior Treasury official who spoke to us on the condition of not quoting that person by name, but I asked a few questions about, does this mean that now all uninsured deposits are effectively backstopped by FDIC? Does this, you guys keep saying that this isn't a bailout, but isn't this fund effectively backstopped by Treasury and therefore taxpayers? And those are questions that the administration was certainly not eager to answer. And I can't imagine the president who, despite being from Delaware, is not particular. His heart is often in really the foreign policy, and that was sort of where he made his bones as a senator. I don't think his head and his heart are in, finance nearly as much. And so I think, it's probably safer for him just to not answer questions.
Jeff, a quick question for the president to address this matter. Not going to say whether that's a smart thing to do or not, but does it show the severity? Does it indicate that there is fear that the sentiment, or I want to call it a run on the banks, but a loss of trust in the system, could lead to a potential contagion?
I was wondering about that. Yeah.
You have any scoops you can sneak in as well today?
I don't have a ton other than from yesterday, but I will say that I think when this announcement was first made, the language that Treasury used to describe the decision I thought was kind of interesting. They didn't say Biden has decided to do this. They said that that Treasury and FDIC were moving forward with a plan that the president had been consulted on. And I thought that was an interesting choice of words. Maybe I'm reading too much into it, but it struck me that that Biden has, sort of a reason to want to distance himself from this controversial action. And to your point, the fact that they still felt compelled to have him go out there and say this, I think, more clearly associating these controversial moves with the president himself, the fact that that was necessary may be a reflection of the need that the awareness that this might not have been enough to stop the panic, and it's important for the president himself to get out there and be like Liam Nielsen in a caddy, or what is it, an airplane, sort of just saying everything's fine, nothing to see here. So obviously we'll have to see if that comes to fruition.
I noticed that too, but then when you look at the tweet he put out, I think at the end of the day, retweeting that article, he said "at my direction." That was the intro to that tweet. So he sort of obviously shifted throughout the day, and then
yeah, and that's what I'm sort of getting at. That I wonder if their initial language was kind of like the president was just consulted, and as the days gone on, they felt the need to be like, no, the president, the White House, we're standing firmly behind the banking sector, and the distance there has closed, maybe as they're trying to make sure that this actually doesn't continue to lead to a panic.
And the Dow just turned positive, by the way.
Wow.
Shit. Actually, Stock Talk, can you give us a quick update on the markets?
Thank you, guys. Appreciate it.
Thanks, Jeff. Appreciate it, man. Stock Talk, you there? Or Gavin, do you want to give us a quick update on the market?
Sorry,
Go ahead.
you're looking for an update
just
on
update on the markets.
banking stocks?
Banking stocks and the market in general.
So, the market in general, has recovered quite a bit from the lows. Actually, it's funny that you asked right now because we're rallying pretty hard here on SPY right now. Some of the bank stocks are turning around, not all of them, but some of them are here. I don't know if there was any particular news that just hit. Was there anything that just hit?
I mean, nothing related to the market. There was a headline with Biden backing the Alaska oil project. Other than that, nothing really has come out since the market opened.
I mean, we just jumped from 3,800 to 3,850 pretty quickly. So, we'll see.
Talking about banks, I think one bank everyone should keep their eye on is FHN. That's First Horizon, and TD announced a deal to buy them out last year for $25 a share. Until last week, it was trading at that price, but with the recent sell-off in all the other regional banks, the stock is down to $15.40 now. And just Sunday of last week, TD CEO said he wants to close the deal as soon as they can, and they're waiting for the U.S. government and other bodies to approve that. But again, this was before all the stuff we saw with Silicon Valley Bank and other banks collapsing overnight. But with this, the risk reward looks pretty good to me. So far, I don't have a position. I thought to share with you guys before I do further research. Gordon, what's up?
Hey guys, thanks for letting me come in. Interesting discussion. So I just wanted to highlight one key thing that I didn't hear discussed. So while the BTFP is great for, I think, the existing banks, one thing to keep in mind is what's a little tricky here is that held to maturity securities.
Entertainment, sports, and more. We'll highlight the achievements
and agency MBSs, similar to like First Republic. They have barely any of those in their HTM portfolio. And if you don't have those, it seems at current, you're not able to access that BTFP program. So I think that's one thing to consider. And then the other thing is there's a big kind of shadow banking sector in the United States that was created post GFC to extend credit to banks that, lenders